everybody, what's up? It is Friday, August 28th, TGIF. Alright, well this is, these videos are getting to be like Groundhog Day, day after day after day. Market is up, new records across the board, not the Dow, but the Dow is going to make a new record too. And again, very quickly, and a lot of people have been emailing me saying, Mike, look at this indicator, look at that indicator. They're so extremely overbought, and I get it. And I was even the one saying a few weeks back, look at the put-call ratio. It's extreme bullishness, and it still is. As a matter of fact, it has gotten even more extreme bullishness. But it doesn't matter. I mean, when you have flows, fiscal flows of this magnitude, the amount of distortion in terms of how overbought it can get, I mean, put a number on it. You know, it could basically go anywhere. I'm going to repeat again, ad nauseum, this is a tsunami of fiscal support. And again, I'll repeat, it is just flowing to these mega cap companies. And their profits are going to go through the roof, and they're just so impactful on the market averages, and they're just dragging it up. And now the banks are starting to perk up. Now, if you go back a few weeks ago or last month, I was saying the banks look incredibly undervalued. Banks look incredibly undervalued. So gold had a nice day today. Yesterday, I sent out an email saying buy that dip. I talked about it yesterday when Powell came out and he said, oh, we're going to keep rates low, and the zombies. That was the easiest short-term trade, day trade in the world. And it's always funny to me because you never hear anything about the fiscal. Never hear any of these zombies and these quacks and these nut jobs who are always talking about they're printing money. You never hear anything. To them, it's all about the Fed. The Fed, the Fed, the Fed. When the Fed says something, they're all over it, and you can predict exactly what they're going to do, and they get it wrong every single time. The Fed is not a factor in this. There is no correlation. All right? And when reserves, when the money printing is going up because of government spending, massive government spending, you don't hear these guys. But as soon as the Fed says something about low interest rates, and low interest rates, as I said yesterday in the video, that is, they're deflationary, 0% interest. Look, I'm going to say it again. It's going to make you sick hearing it, but rate adjustments are price adjustments. You lower the rate, you lower general prices across the board because the cost of credit is reflected in the cost of all goods and services, and vice versa. When they raise rates, it raises the price level. Now you got two things going on here, and they're kind of conflicting. You have Fed policy on the one hand keeping rates at zero, and by the way, I said yesterday, look, if low rates or the zero rate was a tool to create higher inflation, then you'd be looking at Japan having hyperinflation right now because they've been at zero or negative for like decades. It just doesn't happen. They can't even get to 1% because they're at zero, they're at negative. So this is classic central bank thinking, it's wrong. So you have two opposing forces here. You have the zero rate by the Fed, which is a mitigating factor on inflation, and you have unprecedented fiscal expansion. Money printing, that's real. And that's pushing inflation up. But they're kind of, going against each other with a leaning towards the fiscal expansion, raising inflation rates. And I think that explains why you see metals, gold, and silver going up, and some other commodity prices going up, and the dollar going down. And the dollar went down again today. I've been steadfastly bearish on the dollar for the last 2-3 years. And I've been telling you, I told you, anyone who has followed me for any length of time, particularly over the last 2 years, I said that entire dollar rally from 2018 to 2020 would be reversed. And it is in the process of happening. That was a rally in a bear market. That was a counter trend rally. I've been short the entire time, waiting patiently and adding to my position as it went up. It is way, way, way in the money now, my position. And on that note, I want to talk about something because it bothers me. Like, I had a guy who canceled his subscription, and I said, well, what happened? What didn't you like? He said, well, I tried some things. I love the macro. I love the MMT perspective. It clarified a lot of things for me as a trader that I didn't have knowledge about before I came in. But I've been trying some of these things with options, and there it is. The options. How many times have I said, as an investor, as a trader, you can pay with time? What does that mean? It means the market doesn't demand your money. Now, it is willing to take your money. Now, you need to ante up to get in, obviously, to get a position. But after that, it's not demanding your money. If you take losses, that is you paying the market. You can pay with time. What does that mean? The market will gladly accept time. What does that mean? It means you can sit there in a position patiently if you have the fundamentals correctly. Correct. You can sit there patiently, as I did over that last 2-year period, and I'm going to stay with it. I could stay with this position, I don't know, it could be 5 years, it could be 10 years. As long as the fundamentals say to me the dollar is going down, I'm going to sell every rally. But when you play with options, and this guy was buying options, you cannot pay with time. Time is against you. Time works against you. All the professional option traders that I know, especially the ones when I traded on the floor for many years, they were sellers of options. They write the options. So they're the ones who take in the time premium. And even in that strategy, they're usually hedged. They protect themselves because there's open-ended risk when you do that. But if you make the effort to educate yourself and become more informed about MMT and how the monetary system functions, and really get a grasp and a handle on the macro big picture, what are you doing gambling with options? You see, your tactics have to align with your big picture outlook. And if you're using a macroeconomic approach because of the understanding you have of MMT and policy effects on markets, these things, they don't happen in a few days or a week or even a month sometimes. Now there's big money to be made. All right? There's big money to be made. But that only comes, like in these poker tournaments, in the final table. It's little. The final table in the trading context is the big macro move. You can't do that with options. Or if you do, you have to be a seller of options and probably do that hedged with some kind of a spread to limit your risk. So when someone says, oh, it's not working for me, well, of course it's not working for you because, you're spending all this time to develop some understanding and some knowledge, and then you just throw it all away by gambling. If you want to gamble, gamble. But don't delude yourself into thinking a macroeconomic approach is my strategy to be a gambler. It's not. It's not. And even that, I would say, over time, even that strategy might pay off, but you'd have to go through a long period of small losses with those options until maybe you get positioned for the big thing. And again, the options expire, so you're never going to be able to ride it to the full potential. Maybe you could convert it into a cash instrument when at expiration you'll assume the cash position. It's possible, but then if that's going to happen, why not just have the cash position? See, the problem is so many people want to make money really, really fast. They want to come into the game. They don't want to put in the commitment. They don't want to put in the time. They don't want to, kind of, cut your teeth on what you have to do. It's like, I want the money now. I want big money now, so I'm going to do options because it's highly leveraged and I want to. The two things don't go together. I mean, you can do it, but it really works against you. I cannot overemphasize how important it is to, if you're coming at this as a big picture perspective, which is how you should do it. That's how the big money is made. On some secular idea, on some macro trend, and some long-term thing. It's like buying Amazon when it was, $50 a share or $25 a share, and riding the thing because you knew the growth, the business model, the way it was going to be able to scale out. I mean, having that understanding. Or Tesla, or one of these big, Google. Why options? Because, I'll tell you why. People want to make money real fast, and they're looking for shortcuts. There's no shortcuts. There's no shortcuts. There's gambling if you want to do that, but there's no shortcuts. Anyway, go to my website, pitbulleconomics.com. Educate yourself, get informed, understanding of the big picture. To me, people who say that there's no value in the big, that's just like a ludicrous statement. Having an understanding of the big picture is a roadmap to how you can make profits. And knowing correctly how things react to policy puts you way ahead of the game compared to everybody else. All right, everyone. Have a great weekend. Bye.